Thank you for joining our call today. Before we start, I just wanted to point out you can submit questions during this talk. If you click down below the lower right-hand side of the screen, the chat with everyone, and we'll answer them either as we go or at the end of the presentation. And as Middie just mentioned, we'll be recording this call so that we can send it out to you all and also to any of our clients who were not able to attend today. So I'll send that out to you, that recording out to you later, either today or tomorrow. So now I'd like to introduce our speaker today, Middie Rall, who many of you already know. He's our business development director who works specifically with our brokers, and he's going to walk through the recent updates to our DSCR loan program and how you can position your clients to qualify. So let me turn it over to Middie.
Thank you, Debbie. And I just want to thank you all for joining us, and I appreciate your time. And we're going to keep this to roughly 30 minutes. We are recording this call, like Debbie said. I want to emphasize, if you have any questions throughout the presentation, either you can click the raise your hand button, or if you would like, you can input them into the chat, and we'll have a question and answer period at the end. I'm happy to run through any questions, concerns that anybody has. Also, if you have any specific scenarios, any particular questions about guidelines of the DSCR product or anything that we're able to do, please feel free to ask away, and I am happy to run through it. So let's get started. And if you don't have my email address, it's just Middie@gonavcap.com. I shared this presentation with you in the chat, so you can have it available. Some of the slides are a little bit wordy, so just wanted to make sure that you have that available to you. So just a few things that we're going to talk about on this presentation. Just a little bit about us and what geographic areas we lend in. More specifically, we're going to talk mostly about our DSCR product today, some of the updates that we have, some of the programs, and different options that we have for your borrowers. Also going to talk about how we can get you access to our pricing, sending over loan scenarios to us, submitting loan applications in our portal, what to expect in the loan processing experience for you and your borrowers briefly, your compensation. I would say a lot of the updates that we have are in that last two slides for our DSCR product and the time frames expected for these files, and just go from there. So let's hop into it. So just briefly about us, we're a direct private lender. We're based out of Maryland. We lend in 37 states plus DC. We strictly lend on non-owner occupied investment properties. And like I mentioned just a few seconds ago, we're a direct private lender. We have in-house underwriting, processing, docs, funding, post-close. We can help out with the servicing on the back end, especially on the DSCR products and the short-term notes. So I just want to emphasize, whatever you have question-wise, concern-wise, whether it's pre-close, post-close scenarios, we're here and we're happy to help. And it's an open door. Getting into our DSCR rental product, I've mentioned this a couple of times. We're a direct lender on these loans, and it's important to mention that because this is not an experience of correspondent or broker experience for you. We are underwriting these to specific guidelines, yes, but you should not be waiting for a table funding experience, a pre-approval on these loans, waiting 3 to 4 days or a week to get an approval on this loan once we're already underwritten. So once we have our guidelines and our underwriting satisfied, we're setting up closings and we're doing our own docs, getting it out to you. This is mainly a 30-year fixed program. We have options available, but the difference in the rates between a 5, 10, 7-year ARM and the 30-year fix is so negligible that most people just take the 30-year fixed option. The max LTV we have across the board, from purchase to cash out refinance and in between at the rate and term refi, is 80%. I would say on average, you're going to see a 680 to get to that 80% for rate and term and purchase, and 700 plus to get to 80% on these cash out refinance options. Another hurdle to get over to 80% on cash out refinance options that I'd like to tell you about is the DSCR has to be greater than 1.15 typically for that. To qualify at a base level, minimum borrower score is a 640. Like we talked about, the max LTV is at 700 plus. We have three different lending options or three different options for the DSCR product. One of those options will take the highest score of the borrowers in comparison to the two other options that are going to take the lower score of the borrowers, the lower middle score. There is seasoning needed for these lending options. The minimum seasoning that we have is 6 months that you're going to be needed. So whether that's a sale or a transfer from a family member to another, we see a lot of those. You're going to need the 6 months seasoning. One other thing that we want to talk about is we have options from 0 prepay down to 5-year prepay, but the majority of the pricing that we see is from 5 to 3 years. Those are usually the lesser of hits on the pricing aspect to it. But if your borrower cares more about the prepaid penalty than the rate, or they want to balance that and they want to do a 2 or 1 year prepaid penalty, we can make that happen. They can do a 2-1, they could do a 5-5, they could do a 5 or a 1 on the prepay. And that's just the percentage that I was just quoting on that. The minimum DSCR to get in the door for these is 0.75. So if you have somebody who has a less than 1 DSCR, we can look at pricing them out and giving them a few different options and scenarios. Another thing that we can do is also qualify your borrowers on interest-only payments. While the payment will carry the escrows for the taxes and insurance, we can qualify them on an ITI payment if it's tight on the DSCR. Minimum loan amount is 80 grand. Max loan amount is at 3 million. So that's for 1 to 4 and 5 to 8 options. For a 5 to 8 option, your minimum loan size is typically $250,000. So just keep that in mind at 5 to 8. For qualifying and pricing for these deals, I mentioned that we have 3 different options. We are going to send out our tear sheet for each of these options to each of you after this call. We call them silver, gold, and platinum. But each has their own sweet spots for our particular borrowers. The platinum is more so towards higher score borrowers. The gold is a little bit in between, going down to a 640 qualifying and giving them better leverage at the 640, going all the way up, obviously 700 plus. And the silver is geared a little bit more towards the 680 plus borrowers. Pricing has been trending down recently, so pricing is very good if you want to lock in on a rate. But I would say the lowest terms that we've seen recently are right around that 6 3/4 mark, with the bond going up and down. Last week we saw it at 6 5/8, 6.5, but it's really just staying right around that 6 3/4 mark. Pricing is available, and I'm going to demonstrate how you can submit pricing, how you can submit pre-loan applications in our portal. But pricing is available to you through your member accounts on our web portal. If you have a quick scenario that you'd like to talk about, or you'd like to just send over and get a quick quote, I or another one of our LOs that you're assigned to would be happy to take it in an email format and give you over just some quick terms that we have. Once you submit a pre-loan application to us, we are going to send you back an email titled a conditional approval. This will detail the specifics of the loan. It will also detail the specifics of what's needed condition-wise. It will also give you links to complete a full loan application, to submit title company information, to submit documentation as far as conditions-wise. So that email is very useful. I'm also going to demonstrate how you can access all of those same links on our website. So if you have any questions about, is this deal going to work? Can you place this? What do you feel about this deal? I would just highly emphasize it's an open door, and feel free to reach out. We'll be happy to give you an answer. As far as submitting loan applications, there are really 2 ways to submit a deal with us here, but I am going to show you through our web portal Just very quickly, how you can log in, access your account, submit a loan app, and get it into our system. Just as a heads up, whenever you submit a loan application with us, your LO, usually will be me, but if you have a different LO or AE with us here at Navigator, we're going to give you a call to clarify what's important to you, what's important to the borrower, what your compensation is, how you want to split up the compensation, and just really tailor a deal for your borrowers. And if it's a couple options, 4 or 5 options, 2, 3 options, we're happy to give them that so they can look at it and make an educated decision on what works best for them. But let's go back to, just bear with me for 1 second. And this is our website, gonavcap.com. If you'd like to bookmark it and make it easier to get there, I would absolutely encourage that. But when you go to our website, this is the main page that you're going to see. The member login is up top. If you do not have an account with us, or you don't believe you have an account with us, I would just emphasize you click the sign up, member sign up, and you can quickly create a member account with us. You will have to verify your email address. We'll shoot you an email, but it's very easy to sign up. So once you have an account, you're going to log in, and this is the screen that you will see. I just want to ask, you guys seeing this screen stating my account on the NavCap website?
Yes.
Okay, thank you, Debbie. So a few things that you can do, just briefly. You can request a proof of funds. A lot of our broker partners, a lot of our borrowers direct, they like to utilize the proof of funds aspect if they're submitting an offer, and they want to have a proof of funds letter for that. We have a pre-application option, a full loan application option, where you can submit your documents, where you can make payments for your borrower's appraisals, submitting title company information. And these last two are mainly for our borrowers' post-close experience, especially on the short term. For the long-term aspect of this, they're not going to utilize these last two options. But for the sake of time, let's fill out briefly a pre-loan application, rental. Okay, let's say your score is a 700. The exits in the last 2 to 3 years, or 4 years actually, it doesn't really matter as much, but if they have prior experience with investment properties, I would ask that you input it in there. The as-is value, we're going to say this is a purchase and they're buying it for $250. So there is no estimated rehab costs. Again, this is a rental, so we're just going to put 0 in there. The after repair value will not change. It's going to be at $250. In this, please describe your project. I would ask that you just put anything in particular about the project or what the borrower is looking for specifically in their pricing, so we have a good idea when we give you a call what to ask and what to look for when we're doing scenarios for these pricing sheets. So I'm just going to put in rental, purchase. The borrower is looking for max LTV. Purchase price $250.
And we'll talk about the e-builder and bid portal.
Sorry about that.
Don't worry about it. Just real quick on this. Is the property already under contract or refinance? Obviously, if we're doing a purchase and it's under contract, we're going to select yes. It's not under contract, we're going to select no. If it's a refinance, cash out, or rate and term, you're just going to click the bottom option of NA refinance. For the subject property address, let's do 1234 Navigator Way. It's in Washington, DC. Okay, and down at the bottom, contact name for this would be your client's contact name. The reason being for this is when we generate a term sheet, it's going to have your borrower's name and their company name. As a broker partner with us, you've already signed up as a broker partner, so we already have your company information, and your email specifically is tied to your company. So when we run a pricing scenario, we're going to have your company information, your email, and you actually cannot change your email in this application. And that's for the reason that we want to stay in our lane as a lender with you as a broker partner. We always want to send our correspondence to you directly, not the borrower themselves. Just keeps the control and the flow of information and terms and etc. from us to you and you to your borrower. So for this, it's going to be, let's go Navigator. See. And from there, make sure that everything is filled out. Please bear with the system. It usually takes about 10 to 15 seconds to submit a deal through this, but you will know that you have a deal submitted through with us when it thanks you for submitting. It gives you a list. Here we go. Congrats on submitting the application. It will give you a list of documentation to gather and just gives you a brief outline of what we're looking at next. So going back to our presentation, that was the first way to submit a full loan, or excuse me, a loan application with us here at NavCap. When we get that application in, I am going to get that in on my pipeline, or another LO is going to get that on their pipeline. They are going to give you a call. We're going to talk about the deal. We're going to price it out according to what you're looking for and what the borrower is looking for. And we're going to send you over an email titled Conditional Approval for 1234 Main Street. It's going to give the deal specifics. It's also going to give you a PDF that you can download and share with your borrower. And it's going to give you a second option that we're going to look at here to submit loan applications and to access our portal. So Debbie, can you see my email now at this point?
Yes. Mhm.
So at this point, we would have sent over the term sheet. I would have already talked to you about this. This would be a normal quote for somebody at 80% purchase, and give you some of the loan specifics. The estimated cash to close, I want to emphasize, we estimate the borrower's taxes, title, insurance, and their whole closing cost based on their state, as well as their down payment. We don't factor in the earnest money deposit. So if the borrower had a $10,000 earnest money deposit, that money's already into the deal. So we're expecting the borrower to come to closing with another $52,539. I do want to clarify that this is not a final number for your borrower. I'm sure you're all well aware that we'll get the final numbers from title, but this is usually a very good ballpark figure for us to give our borrowers and for them to have proper expectations on what they're going to be needing at the closing table, etc. Want to show you our tear sheet or our term sheet that we send over to you. So just a few things off the bat. It gives your property address. It lists you as the mortgage broker, your fee. It lists the borrower over here, and this will be your email in that subject line right there. Loan amount, rate, the term with the prepay, the base payment without the escrows, obviously the appraised value, Navigator's origination points, LTV, and the cash to close game. We also want to include just a step-by-step checklist for your borrowers. Some of them are visual, some of them are audible, but we just wanted to make sure that we could give them something that they could look at and say, hey, did I give Chauncey every condition on this list that they need? So something that we thought would help. So, and the second way to get your loan application submitted with us, sorry, I got a little bit off topic with the term sheet, is to click the link from your email, and it will guide you to a full loan application from there. I do want to give you just a quick clarification that this application that you're seeing right now is a little bit different because this is a full loan application. This will be when the borrower is ready to move forward with the terms we sent them. and it's just a little bit more detailed. But to give you an idea of what we need for this, we need the information about the property. We need the information of the borrower. We need about their company. It typically automatically fills in if you click off the link. But this is the company that the borrowers will hold title in. If there is no co-borrower, please don't worry about this section. You do not have to fill in the co-borrower aspect of this application, but you're at least going to need to have to fill in one borrower's information. So getting back to our presentation, that's really in a nutshell how you would submit your loan applications with us. I hope that that made sense. If there's anything that we missed on that or that I missed on that, please just ask me. I'm happy to clarify and get you the answer that you need. Because our goal here is to have you and your borrowers have a seamless customer service centered experience and process with us here at NavGate. Talking about the loan processing experience, we have in-house underwriters and processors. As you submit the required and the requested conditions with us, our underwriters will clear them as they come in. And periodically, we're going to send you an updated conditional approval. Terms won't change, but the list at the bottom of the email will grow smaller and smaller as you've put those conditions in. Title work and appraisals are ordered by our processors and underwriters. So if you're used to ordering the title, if you're used to ordering an appraisal, I would ask that you just let us take control of that aspect of it. We will always list your fee on a title request. Typically, if you're just looking for upfront origination, we'll talk about that on the next slide, how we can divvy up upfront and yield spread. But your compensation will always be listed on the title request. You're always getting paid through the title company. We are not holding on to your funds. Moving forward to more of the updates for our program and the timeframes for this DSCR program. A few of the updates that we really have for you is that we have reduced our costs across the board, and we have options to even further reduce your costs across the board to make us the most cost effective or the lowest cost to your borrowers in the marketplace. So one of the first updates that we have is typically at closing, we charge $19.75 for our deals between underwriting, processing, credit, flood, docs, etc. We're moving that down to $9.95 for your borrowers. With the second change that we're looking at is we typically average, especially with our broker partner deals, around 1 point for our DSCR product. We can move that origination down below 1 point. We can go down to no points for our origination. I want to emphasize it will increase their rate slightly, but if our borrower's main concern is, I want to come to the table with the least amount out of pocket for this deal, we can make that happen, and we can get these deals done. It doesn't change their qualifications. It doesn't change anything like that. There's no bait and switch with us. The terms that we send you are the terms that your borrower is going to close on, provided there isn't some crazy difference in their credit or their qualifications or something like that. We do what we say what we're going to do. Another thing I want to discuss with you is the yield spread for our partners and you all on these deals. If you want to make 2.5 on one of these deals, but you only want to charge half of that, or you want to charge a third of that up front, and you want to make the majority of your fee on the back end, that's something that we can build into your pricing. I will tell you, so we're a direct lender on these. We package these in pools and we sell them off in pools. You will get your yield spread on these deals typically when we package these off and sell them off. It's not going to be a long time period, but it may be a week to 2 weeks before we get your back end compensation in there. So I just want to set expectations on that, but that's something that we can build in. The average time frame from start to close, I would say, is 3 weeks. You can push these boundaries either way, depending on what your borrower, how motivated your borrower is to get the appraisal and the title company information into us. Like I said, the conditions on these are pretty straightforward. You can upload the conditions through our portal. We will check them off as they get in. Just a few conditions that have not been listed on on the slide so far, and the applications are that we do look for 24 months of housing history for our borrowers. Rick, is it 24 or 12 months? Is it the most recent 12 months we're looking at?
For history, the biggest concern on these deals is, we're all in this business, is that these are true deals, meaning that these are investment properties only. So they're typically looking for 12 months of a primary residence. And there's some other key factors, not to get too much in the weeds. So if you have a credit report from Bank of America, you live at 123 Main Street, that's fine. Just 12 months is fine. The concern is that you are trying to finance a house that's 4,000 square feet, and you're telling me that you live in a 1,200-foot townhome and you're just happy there. Can that get done? Yes, but it's going to get a little bit more scrutiny. So, but from the time frame, or the time frame for pay histories, is just 12 months. Another thing I want to emphasize too, if you have someone, let's say they're doing a refinance on a property and it's DSCR, the product on all three of these, the gold, silver, and platinum, does allow for a 1 times 30 on the mortgage. They do not have to be golden. They don't. So if you have a 30-day late, that's fine. Rolling 30s don't count. You know, we've been in the business for a while. I see everybody on here, we've been doing this for a while. So if you had somebody who rolled 30 for 6 months, and it used to be we count that as one, that's not the case. That would be 6 30s. You can't qualify. But if you do have 130, you're good to go.
Okay, thank you. Sorry, 12 months, not 20. And so, yeah, that's just something I want to touch base on, and it's something that I've started to ask our broker partners and our borrowers more directly, just so we can get that out of the way up front and make sure that our borrowers can qualify and we all are on the same expectations. One last thing that I want to mention is a change for us here at Navigator for our broker partners, and as far as compensation and your borrowers' cost out of pocket, is that we have a net branch opportunities available to our trusted broker partners. So what this means is that you would work under the Navigator umbrella, and you would be more directly working with our team of processors, underwriters, etc. But another change that we would look at here is if we are looking to charge share by email again. More so, you have more leeway in what we charge origination wise to our borrowers. But with that, there is a 50-50 split on what we get on the front and the back on these deals. So the difference would be in working with a net branch is the mortgage broker would be eliminated from this term sheet. And let's say for our piece, instead of 3 points, we're charging 2.5 or 2 3/4. We would pay you half of that fee, but this mortgage broker fee would not be listed on your borrower's term sheets. Why would you want to do that instead of operating under your own umbrella and operating as an independent mortgage broker? Well, one of the things that we've seen is some of our borrowers for our brokers reach out and ask, why am I paying our broker partner this fee? Now, our response always to this is going to be, if you didn't know your mortgage broker partner, you wouldn't know us. So their fee is their fee. But with that being said, it also creates less questions for your borrower and a little bit maybe less friction for the costs on that. It is an option. It's not a totalitarian forced option for you or your borrowers, but we just want to emphasize for our partners that we enjoy working with, that we close with, that is an option for us and for you, and it can be more profitable in the long run. So I want to open this up. If you have any questions, any scenarios, any concerns, I want to lay out this time period and the rest of our call for that. If you do not have any specific questions, concerns about the DSCR product or any of our processes, I really just want to say I really appreciate you taking the time to join us. I know we're approaching the end of the month here, and I know we are all slammed to try to get deals in. So thank you for joining the call. But I'll open it up.
Middie, this is Chauncey. I have one question.
Yeah.
You mentioned at the outset, there's a 6-month seasoning period. Is that in terms of new ownership? So if someone is going to buy a property, it sounds like they would have had to own it 6 months, or would they have had to have a stabilized property for 6 months?
That's a great question, and I didn't really clarify that too well. So for purchases, there is no seasoning requirement. For a refinance, we see this a lot with cash out or rate and term refinances. For borrowers whose goal is to buy, fix, and hold, they want to use the new value for the property, the sweat equity that they've earned through those renovations on the deals.
Right.
So typically, to use that new appraised value, we're going to need 6 months from the time they acquired and gained title. So I would emphasize if they're at 4 or 5 months and they're already looking to refinance, they maybe have a renter in place, that they get that in place. We look at pre-qualifying them, but we start the loan application at that day of 6 months, and we get it done at that time period.
Hey, Chauncey, if I could jump in there. So again, purchases, there is no seasoning. You know, if you're buying it for 300,000, 300,000 is the value. That's what we're basing the loan amount and the, sales price and LTV off of. But there are a couple exceptions. One, intrafamily transfers. Someone acquired a property through an inheritance. Their mom gifted it to them, whatever that may be. You have to establish that there's a familiar-like relationship between the parties, and you can use the appraised value off of that. Another little nuance that we can do too, because again, this is our money, we're lending it, we're underwriting it. We can do this based on the note date. So let's say it's going to take you 3 or 4 weeks to get this done. Again, we'd like to get them done in 2 or 3 weeks, but you could start 3 weeks, 4 weeks beforehand, get the appraisal done, get the title work done. A day after they've owned it for 6 months, I can close. It's 6 months from the note date, from when they acquired the property to when we close the loan. So you can pick up a little bit of time based on that in order to use the 6 month time frame. Again, 2 of the 3 options that we have for this allow the 6 months. 1 requires 12. So as we guide you through this and you're asking questions, we're going to direct you in the right thing. And the reason why we have 3 programs is, let's be honest, again, we've all been doing this a long time. We are not in a 30-year business. We're not a government subsidies. We don't have GSEs. We're not holding this paper. We're either selling it to a hedge fund or an insurance company after we've closed and we bulk and we sell these. So, but we do just meet the guidelines for what their requirements are for the back end servicers for this, and we're ready to go.
Anybody have anything? All right. Well, I also want to reiterate that we are going to send out the 1-page sheets for each program on this and the specifics and the highlights of the programs. So you will be receiving those today. Also, if you missed anything on the presentation, we're going to send out the recording. And lastly, I just want to thank everyone for their time. I appreciate the opportunity to work with you. We all at Navigator appreciate the opportunity to build that business relationship.